Hello and welcome to Portfolio Matters. Today we're going to do a My Worst Trade on some archaeology going right back to the financial crisis of 2008, 2009 and my trades in the Kazakhstan copper miner Kazakhmys. Now, I would like to dedicate this one to Sunny Days 64, who got in touch with us saying how much he was enjoying these My Worst Trades. And this one is good and bad. Anyway, before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Keith, tell us about Kazakhmys.
Okay, first of all, just an introduction to the My Worst Trade slot. So the idea is not necessarily to talk through trades where you lost money. Is to talk through trades where you did something wrong. Whether you lost money or not, you could have made money, but you feel that you made a mistake that is worth discussing and you learned from that mistake. And the idea of the My Worst Trade slot is really to share your experience with other investors. And I have been asked, why we do My Worst Trade rather than My Best Trade. And the answer is because we're British and we don't like people talking about their successes and boasting about how much money they've made. We like them losing money and commiserating with them. So anyway, on to Kazakhmys. Now, that is relevant because actually I made a lot of money out of this trade, but it was incredibly stressful. It certainly stressed my marriage. It caused me sleepless nights, and I had to increase the mortgage on my house to fund it. So it was not great. And actually, when I look back at these times, this was like one of the big causes of sleepless nights and stress, although, as you'll see, it all came good. So my biggest problem, and something I struggle with, is overconfidence. And so the bottom line is I was just overconfident in my position. I got the timing wrong, but above all, I got the size wrong. And as it went down, I stuck to my ignorance. Basically, I just couldn't believe the financial crisis could get as bad as it did, and that the market could ignore the fact that the Chinese had done this enormous stimulus, which was going to feed through to massive demand for metals. But the market just wasn't getting that. And as you'll see, it continued to mark down the price of Kazakhmys. And as it did so, I lost vast amounts of money. So that basically was ignorance. In the case of the banks, I didn't understand how bad it could get. And the thing is, a lot of the times when you feel you know something, the more you dig, the more you realize you don't. And because I was just looking at kind of the big macro picture, I didn't understand quite how bad it could possibly get. We all anchor to the conditions we've grown up in and the fact nobody had seen a financial crisis since the Great Depression. And so it just wasn't in my mindset that it could possibly get as bad as it did. So going forwards, just be aware that you don't know everything and don't be overconfident. Don't catch a falling knife. It's something that many of my worst trades have again and again. Wait. You'll see that I had ample opportunities to just wait and buy at the bottom. If it had bounced 20 or 30% off the bottom, 50% from its lows, I still would have got in at a much better price than I actually did get in. And so, as I've said, each cycle is different. And, I was basically applying my usual trading strategy in a recession to this one, and it wasn't right. It was the cause of the recession were different. And although my instincts were absolutely right to buy at the bottom, and eventually it did come good, I got the timing completely wrong. I got the sizing completely wrong. And it was very, very stressful. And luckily, I was able to increase the size of the mortgage and fund my margin positions and see it through, but it was hairy. Oh, and also another recurring feature of the My Worst Trades: don't listen to the Investors Chronicle, and we will go through all their prognostications on Kazakhmys as we go through this. Anyway, getting into it. Right, so in 2008, Kazakhmys was valued at around £18. And these are the Investors Chronicles articles on Kazakhmys. And I took some digging to find these, and I think I found them all. So as we go through this, it says in 2007, hold. And then in 2008, hold at £18. The share price then completely collapses to £2.55, and it says sell. And then it repeats the sell at £5.10. It repeats the sell at £9.50. Repeats the sell at £15.27, and then it moves to hold. I mean, you follow the Investors Chronicle. Yeah, God, don't get me started. Anyway, these are my trades in Kazakhmys. So as we've seen, the share price was above £18. And yeah, well, the way I have made money over the years is by avoiding recessions. So I had moved out of the market and I was entirely in cash. And then in October, I thought, this has gone far enough. This is getting a bit silly. So I bought some at £7.20, bought some more at £5.50. I bought more at £2.80. And at £2.80, bear in mind, I'm down about 60% on my initial investments. And at this point, I made a serious error of judgment in that I was so confident, I put in quite a large spread bet, buying more. So I was so confident, I thought I need leverage. And it carried on falling. So I've got the order slightly wrong. No, it must have bounced, and I bought some more as it bounced. £3.35, £3.40. And then I bought, the last tranche was at £2.10. And it bottomed at £1.80. Now, at £1.80, you've lost something like 70% on your initial investments. But above all, I was getting margin calls. And we had to increase the size of the mortgage, which was a very difficult conversation to have with my wife, I have to say, who was ultimately incredibly supportive. But those were not good times. But anyway, I held on to it, and ultimately it all came good. I mean, I probably sold it a bit early, but frankly, this wasn't a great experience. I was, actually looking to just get out of it. And obviously now the shares are back down under £7. So, selling was the right decision, but I probably could have held on a little bit longer. So ultimately, very successful trade, but hugely stressful. And I did so much wrong that I would not want to wish that trade on anyone else. So anyway, Richard, your thoughts?
I just think that the way you bought it as it was going down, Keith, it is such an easy thing to get into, and it's so easy to have a premise which makes perfect sense, but which is actually wrong. But you only know it's wrong after the event, and your premise that it couldn't get any worse because was perfectly logical to you at the time. I was just mindful of it. There's a graph. I just looking for it. I can't find. It's a chart. Basically, the share price goes like this, and at various points it's annotated. And at the top, the shareholder says, "This looks good. I'll buy it." It drops a bit. He says, "I'll buy a bit more." It drops some more. Says, "It's gone too far. I can't sell now." Hits the bottom, and he says, "I can't. I can't stand this, I'm going to sell. And it
Yeah.
starts going up and he says, I'm not buying it, it's going further down. And he buys back in at the top ultimately. And that
Yeah.
is just classic human psychology.
Yeah.
But when you're in it, it's one, you don't know you're in it. And secondly, it's very hard um, to lose the basic emotional behavior that we have. And so it's a really interesting trade. I'm very glad you made money on it in the end, because if you
Yeah.
hadn't, we wouldn't be doing this. Um,
Yeah.
but it's a really interesting point. And your comments about the Investors Chronicle, I mean, I think you have to be very, very careful of press tips in general, as
Mm.
I have said in a couple of my worst trades. And yeah, it's down to do your own research. And also, don't take on faith what other people say about a share, but understand it yourself.
Mm. No, absolutely. That's absolutely right. And you know, we have previously covered some disastrous trades where I was basically taking it on other people's word.
Yeah.
But finally, and when you look at the final analysis, I was early, and the reality is you don't need to get in early. You wait until it's bottomed, because it takes time for it to come up from the bottom, and you don't know how far it's going to go down. And
I
if you
think,
do get in, just get in small amounts and wait for it to bottom out. And above all, avoid leverage. The leverage can kill you. And that
yeah.
is the one thing that the big takeaway from this trade. I'd certainly never do that now.
Yeah.
That was a total disaster.
I think the one of the things that one can usefully do is combine a little bit of technical analysis. So
Yeah.
with your fundamental investing, which helps you time your positioning. And as
Yes.
you say, if something is going down, wait for it to bottom. You can use fairly simple graphs, straight lines, and moving averages to get a feel for if something has bottomed. And yeah, you might miss the first 20% move, but if it's a 300% move, that 20% is irrelevant, but it keeps you
Mm.
safe.
Yeah. No, absolutely, Richard. Yeah. Um, obviously this taught me a lot of lessons. So
Good.
anyway.
Well, thank you very much, Keith, for presenting that worst trade. I think it was actually really interesting, and thank you for sharing it. And I hope other people found it interesting too.
Absolutely. And we would very much welcome other investors coming on to share their experience. We've already done one with William, which was very interesting because he was doing a lot of spread betting and he had shorted Slack technologies. So would like to learn from other investors from their experiences. So please drop us a line at info@portfoliomatters.co.uk and come on. The water's lovely.
Thank
Anyway,
you.
in the meantime, please can you press like and subscribe to the channel, and it's goodbye from Richard Weiser.
And it's goodbye from Keith Jordan. Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.